Hi, folks. It's Jim Wortham. It's April the 3rd, 2025. I'm slow about getting back to responses. Um, if you don't, if you don't hear from me with the answer to a question, uh, put this email address down. It's Jim Wortham, like my name, JIMWORTHAM 123 at gmail.com. That's Jim Wortham 123 at gmail.com, and ask and give me the feedback or question again, and I'll get you there. I'm very slow about getting back on here because it's usually at night, and I got a pile of responses that I try to get to, but sometimes it's only a day's worth that I can answer. Not in good health, but wanted to share some things with you today because of the crash in the sort of a crash in the stock market. Now, I know you probably read my other videos to where my whole retirement is in the stock market, with the exception of Social Security. So when I lose today, I may lose 25,000, 30,000 in one day, and then I look at it. I don't feel bad about it because I know it's going to go up and down. I've lived through this 7 times since I started. Well, I started at 14 years old in the stock market. So what I do is I keep buying. You can look at my other YouTubes on how I paid off my house and built a retirement system after the 2008 and 9 recession, which some people on CNBC TV, that's CNBC, it's the financial network. They even have guests on there that will scare you thinking we're headed toward a recession. Now, what we're headed toward is a response from the what Donald Trump said he was going to do tariffs with. That's what everybody's reacting to. Now, can it cause a recession? It's got to go down a lot further, and stay a lot longer before starting to go back up. We don't have every bank in the nation going broke like we did in 2008 and 9. We only have some stocks going down 10, 20, 30, 40%, including Apple, my favorite. That's my main source of retirement. I think at one time it was down toward $20 a share. Anybody that bought it up at then, God bless you. You'll thank me later. I put in some orders at 200 for it. Didn't have much to give, but I thought I'll buy them at 200. If it goes that low, it's been as high as 280 or 260. So when I was checking on it before I went out to eat, Fidelity put signs across saying there's so much trading going on, we can't give you a price on anything. Well, that ended it for me. Earlier, maybe an hour earlier, or 45 minutes earlier, I was able to put in several stock orders. No, I'm not buying too many, one or two or three shares each. And I'll talk about a few of what I'm buying. I'm not suggesting you buy them. You already know I make my living mostly in the stock market on a single stock called Apple. I think the symbol say APL. If you want more of a steady income that pays dividend every month and 4 bonus and dividends throughout the year, and look this stuff up. Don't go by anybody's suggestion till you do your own research. You can go to the best place I would recommend would be I would go to Yahoo Finance. Yahoo Finance. They'll even track if you put in the symbols you want to be alerted to when you go on that site, they'll pop up. You'll have to spend a little time because there's a teaching part there. They'll tell you where to put the symbol, and I'm not sure if that's the one that you could put what the price is now, and it'll tell you what the current price is later. But it's a YouTube. It's Yahoo YAHOO/finance, or put finance first, then Yahoo. Either way. Okay, so Main Source is one that I would consider a much better deal than for myself than CDs or fixed income. It's the closest thing you can get to fixed income because it pays every month the dividend, and it throws in the extra 4. Like every 3 months you get an extra dividend. And you can look on the graph, you can look and see it going up. Now what Main Source does, well, it goes by Main, MAIN, but it's Main Street Capital with the symbol MAIN. What they do is they loan money out. They're sitting on over $1 billion right now to give to companies that need it, that can't get it from the bank. But part of the deal is they get part of the company too. So you're winning both ways. You're winning on the, if I understand right, you're going to win on what they charge for interest, and you're going to win on the fact that as the company grows, they get money from that too because they own part of the company. Another one I like is, these are 2 standbys. S&P 500, I buy it under the symbol VOO because it's under the Vanguard system, but you can buy it under any of the traders that you use. I use Fidelity. The reason I like VOO is because it's got the very, very, very lowest internal cost. So you're not paying for a load, but someone's got to manage those 500 stocks each year, and you're only paying a fraction of a penny or so for that. Maybe not that much. Then the other main one I like is QQQ. It's the top 100 technology type stocks. I think I made a lot more money on it than VOO, but you need both because one's 500 stocks that pretty well takes all the big stocks of the financial universe, and they close at 4:00 p.m. and you'll probably get your results. Not sure about this because there's regular mutual funds. They close at 4, and then there's what's called the exchange traded funds. For example, SPY is the 500 that you can trade all day long, but VOO contains the same stocks, but it closes at 5, and you can't trade it all day long. QQQ is one I think you can buy all day long. It's not a mutual fund, but the other one that I mentioned where you can buy all day long. I'm not gonna, this is the first time I've looked at some notes, and we've got a gold stock I've started buying today in 3 different funds. See, I got retirement fund, I got a regular trading fund, and my wife has a fund. So we put a gold, first time for 10 years or 20, when gold hit a peak last time. The one I chose was symbol KGC, and it's Kinross, KINROSS gold. And do the research if you decide to buy it, see the graph, see it go up from 5 to 10 or 5 to 20, whatever it's done in the last year. And you may be impressed like I was and dabble in it, but put your feet, couple shares in each of your funds. Okay, I gave you 4 of what I'm in. And again, I'll say S&P 500, no matter what symbol you buy it under, it depends on what brokerage firm you use. You could, or if you use Fidelity or Vanguard, just put VOO. That's your S&P 500, or put SPY, SPY. That's S&P 500. Same stocks. The QQQ's top 100 technology stocks, usually the fastest growing stocks that I've ever seen. And then, of course, you know I own Apple, AAPL, I think's the symbol. I'm going to buy more of it because it fell about $20 today. And lower than it's ever been that I bought it for about a year. And then Main Street Capital I've had off and on. Check it out. Check out how well it's done in the last year, 2 and 3 years, and how much dividend. Check me out on what I say. And don't expect it to zoom up like a regular stock. It's more like a growing CD, but not quite, because it's not insured by the bank insurance company. like I said, they're sitting on over $1 billion right now, waiting to find a company good enough to share it with. So it ain't no bank. Is there anything else here? IBM, a friend of mine recommended. I don't know. I've known people that work for IBM, and we didn't jive. So I haven't bought IBM for a long time. Walmart, yeah, it's done well lately. I haven't been following it. There's a lot of things that I could mention, but I wanted to tell you the ones that I'm particularly interested in enough to share with you so that you can do your own research and decide if they're right for you. Another one, several of the chip ones that doubled last year when I got into it, like Taiwan Semiconductor, has gone down, and this all these different other stocks that I would have not recommended but told you I was in are being affected by the tariffs because the companies are in other countries. Not the countries, the stocks are in other countries, and the stock market people, I say people, who runs a daggone stock market? The people are afraid, computers are afraid that's programmed to sell at a certain cutoff level. So if it drops down a certain level, a computer will sell it out for a university or a business if they are in a mutual fund that's in somebody's IRA. They can actually, if the stock market drops too much, the SEC, Securities and Exchange Commission, will shut the whole thing down. So it didn't go any further down. I've not been in it when that's happened. I've been in it when it came close to happening. But usually when the stock market falls like this is my opinion, in a year it may be up higher than it ever was. So don't fear. My advice is hold on to the horse. Hold on to the horse and let the horse race. And don't sell. Unless you have a really good reason for selling, such as there's a brilliant stock that's you've been following, that's going up and up and up, and there's one that's staying still. You may want to sell some of that that's standing still and put it in the one that's going up and up and up. This is where it gets fun and it becomes a game. Again, I've been late getting back with questions. If you don't hear from me, please try my email, jimwortham123@gmail.com. If what I give you is beneficial, feel free to hit like and subscribe. It's not always going to be on this topic. I guarantee I had no plans to put one on tonight. But when I saw what the stock market did, I knew a lot of people was going to say, what to do. Okay, here's the bottom line. what to do is nothing. If you check these things out and other things out you've been looking at, and you wonder, should I sell out and go in cash? That's never a good idea. No one ever goes back in because nobody tells when the stock market's going back up again. I have so many friends that are out of the stock market from 2008 and 9 because some financial advisor told them to get out, but they didn't tell them when to get back in. So what are they doing? They're working a second job, and they never put that money back in, but they spend it on a cruise or something. Okay, that's my view. So hold on. Don't sell out. It didn't help anyone that I know to sell when it may double in the next year or two. Okay. Straight from my heart to you. Take care now. Subscribe if you like.